Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This video continues the discussion and expands on the essential ideas introduced earlier. The notion of owning massive tracts of affordable, raw land in a beautiful, secluded setting appeals to many. You browse listings and see acreage outside established areas selling for a fraction of suburban prices. This dream often promises serenity, privacy, and long-term wealth. However, for real estate investors looking toward the future, that low sticker price is usually a trap. The risks associated with truly remote land that lacks basic infrastructure vastly outweigh the potential rewards. When we talk about real estate with no infrastructure, we mean properties without public water, sewer lines, paved road access, or nearby services like schools and stores. Buying this type of parcel requires you to build everything from scratch, and that quickly drains your wallet and patience. This video explores the critical reasons why you should avoid investing in these infrastructure-poor remote locations throughout the year. The high price of cheap land. Hidden costs that kill profit. The main bait for remote land is its initial low purchase price. It seems like a bargain compared to developed parcels. Yet, this low entry cost becomes incredibly deceiving once you factor in the financial commitment required to make the property habitable or saleable. This required spending often triples the initial investment, making a simple profit impossible. The shocking cost of bringing in utilities. Basic necessities like water and disposal systems are expensive necessities you must provide yourself. If there is no municipal water, you must drill a well. Depending on the geology of the area, well drilling can cost tens of thousands of dollars. You also cannot connect to a public sewer, meaning you need to install a septic system. Permits, installation fees, and the physical work for a septic system add significant costs. Electricity poses another major hurdle. Running electrical lines miles back to a remote plot is prohibitively expensive. Utility companies often charge per mile for extensions. The alternative is investing heavily in solar power, which requires large battery banks and professional installation, easily becoming a $30,000 to $50,000 expense just for basic power. These self-funded infrastructure costs dramatically inflate your total principal investment. Why land appreciation stalls without paved access? Property value growth depends on strong demand and comparison with nearby sales. When a piece of land is difficult to reach, requiring a specialized vehicle or careful maneuvering, the market shrinks dramatically. Most typical buyers, including residential developers or speculators, want move-in ready access. If your property lacks paved, county-maintained roads, its value tends to stay flat or even decrease, especially during economic slowdowns. The property lacks liquidity, meaning it is incredibly hard to sell quickly or for a good price. Investors stay away because they understand that future buyers will face the same access challenges. Financing headaches. Banks won't fund raw land. Securing a mortgage for truly remote, raw land lacking utilities presents significant problems. Traditional lenders, including mainstream banks, consider these investments too high risk. They fear the land cannot be easily sold if the borrower defaults. If you find a lender, they often require a very high down payment, sometimes 50% or more of the purchase price. This forces most investors to pay cash. Paying cash for an unproductive, difficult to sell parcel ties up massive amounts of capital. That same money could be used for safer, more profitable investments such as rental homes in established secondary markets. Safety and access nightmares. A practical look at life too far out. Beyond the financial pitfalls, owning very remote property presents complex and sometimes dangerous logistical issues. These challenges impact not only the quality of life if you plan to build, but also the security and maintenance of the vacant land itself. Emergency services are hours away. This ends part 2 and completes the full explanation of the topic. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.